Welcome to Trader Talk, the show that's here to break down what's cooking on Wall Street so you and your portfolio don't get burned. But first, let's get to today's market tips, and these are so relevant considering my guest today. Diversify, diversify, diversify. The recent upheaval in what we've seen in the quantum sector is the perfect example. You might love a single name like Ionic or QBTS or Rigetti, but when it tanks 40% in one day, that feels very uncomfortable, and you can do a fair amount of damage. That's why diversification matters. It dampens the roller coaster ride when an entire corner of the market goes on sale. Spread your bets across varied industries. Think healthcare, technology, consumer staples, energy, financials, and across the mid-cap space, the market cap space, small cap, mid-cap, large cap. If quantum truly is the future, and I think it is, then go for it. But make sure that you have a broad, diversified base to help balance out the risks and that you will ensure you're not left breathless by near-term volatility. And two, find the disruptors and then do your homework. It's easy to fall in love with a disruptor, like, recall, Amazon was a disruptor at the very beginning, especially if the chart's up triple digits in a short amount of time. And your buddy at the gym says it is the next big thing, right? A popular story can create momentum, but a big run-up doesn't always mean it's a sustainable story. You've got to do your homework. You've got to understand the story. And you've got to be able to educate yourself on the narrative and then make a reasoned decision. And when you decide to jump in, do it methodically. Start small. Dip your toes, because I like to say it gets a sense of how it trades and what it means and how it moves. There's always time to buy more. And let's talk about crypto. The cryptocurrency industry is poised for significant developments in 2025, influenced by regulatory changes, technological advancements, and evolving market dynamics. Key aspects of the current outlook include U.S. regulatory shifts, with the appointment of pro-crypto SEC Chair Paul Atkins under the new administration. A more supportive regulatory framework is anticipated, potentially fostering market transparency and innovation. Consumer protections. The U.S. Consumer Financial Protection Bureau, the CFPB, has proposed rules requiring a crypto company to align digital wallet security standards with those of traditional banks. This initiative aims to enhance consumer confidence in digital assets. And the introduction of Bitcoin exchange-traded funds, the ETFs, has made crypto investing more accessible, more attractive, and it's attracting substantial institutional investment. BlackRock's iShares, the Bitcoin Trust, for instance, has amassed over $52 billion in assets. Quantum stocks, the latest disruptors, just took a major beating after Nvidia CEO Jensen Huang, also known as the tech world's gods, crashed the party at the CES conference out in Vegas. He declared quantum computing is still 15 to some 30 years away, and investors ran for the exits faster than you could say sell. Names like Ionic and Rigetti Computing and QEBT and QBTS got hammered, and the quantum ETF fell nearly 5%. Oddly enough, on the same day, Nvidia posted job openings for, guess what? A quantum team while slamming quantum's potential. Was it a coincidence? I'll let you decide. Meanwhile, the broader market continues to struggle as bond yields creep higher, oil dips, gold inches up, and the VIX moves into a more anxious territory. We've had appearances from nearly all of the Fed heads, and the message has been mostly the same, leaning more hawkish, but they all hedge themselves, saying that they remain data dependent. The strong NFP report this month, along with other strong data points, sent the markets into a tailspin, leaving the Fed in a very interesting position. Investors who were betting on multiple rate cuts this year may find themselves surprised. I don't think we're getting any rate cuts, right, this year at all, as I think the risk is to the upside. Last week, Bank of America came out, and guess what? They changed their position to match mine. I suspect other big banks are going to be doing the same as we move through the first quarter and assess the coming economic data points that I think are going to suggest that the economy remains robust and that the labor market is not imploding and rates are not nearly as restrictive as they have you believe. So, if you're licking your wounds from the quantum carnage or the recent strength in eco data or the mixed messages coming from different Fed heads, after we talk to my next guest, I'm going to treat you to a grilled ribeye served on a bed of fresh arugula and red onions, topped off with shaved Grana Padano cheese. Ladies and gentlemen, get ready for a true force in the world of disruption in exchange-traded funds. She honed her skills at direction, rising through the ranks to become one of the industry's foremost experts, so much so that her insights have graced CNBC, Bloomberg, Fox Business, The Wall Street Journal, Barron's, Yahoo, and Forbes, to name just a few. Now, she's the CEO and CIO of Defiance ETFs, where she drives the firm's investment vision, capital market strategy, and product innovation. It is my pleasure, ladies and gentlemen, to introduce you to the trailblazing Sylvia Jablonski. So, Sylvia, thank you for joining me. It is such a pleasure to have you today on this podcast.
Thanks so much for having me.
Let's talk about what's going on, because we have to talk about this.
Okay.
What's going on in the quantum space, considering the role that you have as CEO of Defiance ETFs and the quantum ETFs you have, and all that kind of chaos that Jensen Huang created a couple of weeks ago at the CES conference, right?
Yeah.
So tell me, give me a bird's eye view from where you sit in terms of what that really meant. Are you worried about it? Should investors be worried about it?
Yeah, sure. So, we've had this fund since 2018, and we thought that machine learning, AI, and supercomputing were going to be the big themes of technology in the future, the fourth industrial revolution. And it takes time for things to pan out, right?
Right. So just so the audience understands, the fund is quantum.
Yes.
QTUM, which is the ETF.
Yes.
That's what we're talking about.
Yes.
It's a tech and quantum ETF.
Yes, exactly.
So go ahead.
Yeah, and so it's been around for a long time. And then when we had that ChatGPT moment last year with Microsoft, all of a sudden people started finding it and saying like, wait, this thing says AI and machine learning and quantum, what is this? But it has all of these great chip stocks in it and all these great tech companies, and the performance has been, awesome, right? So it really started to participate. But then what really changed for that ETF was when Google and Alphabet announced Willow, right?
Right.
And it took off. And to your point, like things looked really great. All these stocks were up 500, 600, over 1,000% in some cases, right? And investors really started to open their eyes to quantum and like this future of technology.
Well, the last 3 months of 2024, if you look at some of the charts on, if you look at some of the charts on Ionic Q, on QUBT, QBTS, you see they all went like this in a straight line up.
Absolutely. And D-Wave, IonQ, and Rigetti were better performers than Nvidia and some of the darlings that we've been looking at, which who would have thought, right?
Right.
And so, we're very excited about that. We love that it got some hype. We do think that it's going to take some time to play out, but we don't necessarily agree that it's going to be 15 to 30 years.
Yeah.
And to answer your question, I said this to you when I walked in, like when we heard him talking on the conference call, it's Jensen Huang. What he says, people listen to, right? We were like,
he's like a god, because he is like a god in the industry.
He's like a god in the industry, but he's a god in the AI, GPU, chips industry, right? He's not necessarily known to be an expert in quantum.
Right.
He's a big investor in quantum.
Right. And he supports quantum.
And he supports quantum.
They put out an ad to hire quantum
it is
physicists.
Yes. So quantum already exists in some form, right? There's niche capabilities and capacities, but they're changing, large sectors within our industry. So for example, banks and risk management, cryptography, drug research, right? Like optimizing molecules so that you can basically figure out how to do drug discovery, how to, better drug trials, cancer research, all these things. Like that's already happening. D-Wave is already doing quantum annealing, right? So some of this exists. It's just not the whole, quantum supercomputers that we're thinking about that are going to work in 1 second and have no errors. Yes, that will take time.
Right, but that's like anything. It'll take time.
Yes, so will AI.
Right, 100%.
Right.
Now, it's interesting. After he came out and made those comments, and the individual names get absolutely crushed the next day, right?
Yes.
the CEO from D-Wave was actually here at the New York Stock Exchange. I think he was on closing bell, if I remember correctly.
Yeah.
And he was challenging what Jensen Huang had to say, right? That he doesn't believe it's 15 to 30 years out, that Jensen Huang didn't understand what he was talking about, which I think is a little bit interesting because everyone thinks of Jensen Huang as, the god, right? He must know everything about technology and AI and quantum. And so I think there was a little bit of a challenge there, right? I was actually looking forward to other CEOs like Rigetti or IonQ to come out and kind of challenge it. And I haven't seen that yet, which kind of left me thinking, scratching my head just a little bit because, I own all those names, right? I own those 3 A's. I don't own the ETF, and actually I should have owned the ETF.
Yes.
Because to your point, the ETF is not just those names.
Right.
It's other tech and it's other AI. So when all those stocks got crushed, the day after Jensen Huang, they were down 35, 39, 45%. Your ETF was only down 5%.
Yes.
Right? Because it had all the support of those other kind of tech names in the space.
Yeah.
Right?
And you kind of have to do that when, there are different ways to launch ETFs, right? Like you could have a pure play on quantum and that would be great, but you have to understand it would be volatility, pure play, and it's a new innovation.
Right.
We did it because we knew that who are the top players in AI going to be and in quantum going to be? They're going to be Nvidia. They're going to be Google. They're going to be Amazon. They have the balance sheet for this. They can invest in this, right? And so if these things take off, they will benefit from them. But if they don't on the smaller caps, they will be a ballast for when this type of thing happens. And so that's why we love the ETF. We purposely created it to do this. On the other hand, IonQ is saying that they're going to come out with their strongest earnings season yet. And, we think actually that if you look at what happened with Nvidia stock around AI, there's been times where the market has come out and said, oh, it's all hype, it's garbage. Nvidia fall, it's down 15% now, right? I think these are buying opportunities. I think we're going to see a lot of investors buying on these dips. We're seeing it in quantum.
Right.
So.
I think they are buying opportunities, especially, and this is what I say when I speak to clients or I speak to people that are just asking me questions, if you've got a good name that's on sale, it's down 15, it's down 20 or 25%, those are opportunities. Unless the story has fundamentally changed.
Right.
Then it's an opportunity for the long-term investor. If you're a day trader, you don't care because you're listening to the noise. You want there to be more noise as a day trader because that's what you're doing.
Exactly.
But as a long-term investor, you really want to look at those opportunities when those stocks sell off for no other reason. Part of it's a cycle. Part of it's some nervousness, maybe in the broader economy, or because they don't know what the Fed's going to do, or because there's going to be a change of leadership at the top. In the country, not necessarily not at the company, but in the country, that causes people to get nervous, right? So I do think that opportunities in Nvidia, to your point, or some of these other tech stocks that are down 15 or 20%, maybe some of these quantum stocks that are down 40%, really provides an opportunity.
Dollar cost averaging at its best.
100%.
And this happens 100% of the time, right? Look at every tech bust that we've had where we've had a horrible year in tech. The next year you get these, high double-digit, triple-digit returns, and investors who have, systematic process to buy stocks over time, they're the ones who benefit.
They're the ones that benefit because I don't think quantum's going away. No, I don't think it's going away.
Right. The innovation didn't stop because he came out and said that.
No, exactly right. And look, the innovation didn't stop when they were questioning AI. And, listen, I was the perfect one to say, I'm not talking to a computer. I can't stand it. I want to talk to you. Now, I talk to every day. I talk to my ChatGPT like it's you. I'm having a conversation because you say, good morning, ChatGPT. And it says to you, good morning, how are you? And I scratch my head going, who am I talking?
Right. And just think about how far it's come so fast.
So fast.
So the point being with quantum as well, right? You had the CEO of IBM come out and say that by 2033, they're going to be delivering this high-level quantum computer with qubits at its best, right? And so who's right? The guy who's working on that thing or the guy who's watching the work on the thing? I don't know. I think
and I agree,
there's a lot to be said.
I think you also have to think about who's saying it, right?
Yes.
Jensen Huang, I get it. He's brilliant. He's done an amazing job with Nvidia. There are a lot of very wealthy people because of him. I get it.
Of course.
But, you also have to kind of scratch your head when he makes comments like that at the CES. Is he talking his own book? Is he trying to knock the other ones out of place so that they focus on him? A little bit. I feel like a little bit that's what's happening, or that's what happened.
I think it's a little bit of that, and I think that it's also a little bit of maybe a glorified larger statement than it needed to be, because nobody can predict whether or not quantum computers are going to be flawless and work really well in 3 years, 5 years, 10 years, or 15 years. The same way we can't predict whether all of the AI inputs are going to work.
And to your point, who thought even a year ago that AI would be where it is today?
Right.
And the way that people are using AI, right? I mean, people are using ChatGPT and Magi and all these other ones in ways that they probably never even imagined when we first started talking about these names. But now it's like second nature.
And the world has actually changed because of it. Like if you look at ChatGPT, when you had initially started to use it, like it was error ridden, right? You couldn't really rely on it for everything.
Right.
Now it's pretty good.
It's pretty good. It is pretty good. I think Jensen Huang is amazing. I own Nvidia. The firm owns Nvidia. Plenty of people own Nvidia. He's done a great job.
Absolutely.
But I really wonder if he's correct or if he's talking his own book.
Yeah, I mean, it remains to be seen, but I do think that they are slightly different worlds,
right?
And I think that he's very much the leader in AI, machine learning innovation. All of a sudden, the word quantum took over, and some of the stocks that became a little sexier this year
suddenly,
were not Nvidia.
Suddenly, the focus wasn't on him.
We'll see.
Right?
We'll see.
So wait, so talk to me now that we're going to start with earnings season. So just give me a sense of what you think. How tech is going to perform this earnings season?
Yeah, I mean, I think tech is going to hold up. I think I don't see anything that has changed from last year necessarily.
Right.
We're not going to get these rate cuts that we hope for that are going to just propel the stock forward as fast as we may want to.
Right.
But I think that large cap tech has earned their multiples essentially. I expect earnings to be solid and positive for these big companies. But I just think in general we're at a solid spot in the economy. Like 2025 could be a good year. We could have low double-digit growth. Maybe the Fed cuts once or twice. Consumers in good shape.
So
hate the jobs number, inflation.
Okay, so let me ask a question. So after what we just saw, you just said you hate the jobs number and inflation's rearing its ugly head. And we're going to get more on that.
We need more data.
With the next PPI and CPI, we're going to get more on that. And the PPI we've seen for a couple of months in a row now has ticked higher, small, but it's ticking higher.
Yes.
And the latest one that's due out in mid-January is expected actually to tick even higher, right?
Yes.
So that is raising concern about where inflation is going to go. So I really wonder, are you still in the camp that we're going to get rate cuts, or you're in the camp that maybe we won't?
I think we'll probably get a rate cut. I mean, so the problem now is like you also have these wildfires in California. That's going to impact, that's going to impact some of this data as well. You had seasonality, which impacted some of this data, the hurricanes, things like this.
Right.
Jobs were a little bit hotter maybe than they would have been, I think, because some of this natural disaster type of stuff, and will continue that way. But I suspect we get a rate cut. I don't think it will be much more than that.
Okay, hold that thought 1 minute. We're going to be right back. Okay, Sylvia, we're back. So wait, I want to pick up on that conversation because I'm in the camp that we're getting no rate cuts this year.
Okay.
I'm not in the camp that we're raising rates, although I do think the risk is that rates could go higher if inflation spins out of control.
Yes.
Right? That's the big question mark for me.
Yes.
Do I think it's going to spin out of control? I don't think it's going back to 9%, the way it did. But could we see inflation go from, the 2.5% it was to 4% or 4.5%? I think there's a chance we could. And I think then that puts the brakes on for the Fed. I don't see how the Fed can then justify or convince us that it's necessary that they cut rates.
So if they can't convince us of that, and they don't do that, the other perspective is that means that things are okay.
That's agreed, 100%.
Right? And so I'm not really tied to how many times the Fed's going to cut this year. I'm more tied to, the macro data, right? Like what does the consumer look like? Is the consumer spending? What is the GDP outlook? It's still, we could still get 2 to 3% growth.
Right.
Corporate earnings look positive.
Right.
Consumer strong, all of these things. So I think that as long as that holds up, my caveat has always been like, what is the contrarian to your bullish outlook? And it's two things, wars in the Middle East, these things that came up this year, or inflation and rates, right? So it could happen. Can't predict the future, but I still think no recession, soft landing, and you're better off. I mean, up 20% is better than 5% treasury. Like we're kind of there now.
I agree, and there's no doubt about that. I tend to be a little bit more conservative in terms of where I think the Fed is going to go and whether or not I think they can really pull it off. And look, current rates are 4.5, 4.75, which I don't think is restrictive.
So high.
Goolsby, Austin Goolsby from Chicago thinks, rates are so restrictive, they get it on 100 basis points. I go, scratching my head going, what are you looking at that the rest of us are not? Now look, I think for 13 to 15 years, people got used to 0% rates. There's a whole generation of people behind you and me that think that that's normal.
Yes.
It isn't, but nor are 20% rates like they were in 1980,
Right.
Those weren't normal either.
Right.
But I think, 4 to 6 is very much in the normal range.
Right. Certainly not the end of the world.
Certainly not the end of the world. In any event, listen, Sylvia, this was a great conversation. I so enjoyed it. I want to do this with you again.
For sure.
After we get through tech season and after we see what's happening kind of in that quantum space, because we're going to keep our eyes on it. And I'm going to go out and buy some QUTM.
Sounds good.
QTUM.
QTUM, yeah.
QTUM. Quantum. Before we go, I want to recap today's tips, right? Diversify. Even in the hot sectors, the quantum space is a prime example. It's tempting to pour everything into a single name like Ionic Q or QBTS or Rigetti, but watching one stock plunge 40% in a day can knock you flat. That's why diversification matters. Consider an ETF like Quantum for a broader approach, and remember to spread out across other industries and market caps as well. Your portfolio will be a lot steadier for the journey. Find the disruptors and do your homework. Don't get lured into it just because it's the latest hot thing without doing your homework. Educate yourself, ask questions, and build a position over time, methodically. Remember, a soaring stock price doesn't always mean it's a good investment. It just means that there's a lot of excitement and momentum is building. But remember, I was here when the dot-com bubble became all the rage, and that didn't end well. Still, don't dismiss a good narrative, and momentum can and does attract more capital, but it doesn't necessarily confirm legitimacy. And there's a lot happening in the crypto space. Rule changes and regulatory shifts are top of mind as the new administration moves into the White House. Consumer protections are also top of mind as the industry matures, removing the risks to the digital wallet, aligning them to more traditional security standards. And with the proliferation of crypto ETFs, the asset class is quickly becoming much more mainstream. That being said, we need something that we can sink our teeth into. So try the grilled ribeye on a bed of arugula, red onions, topped off with the shaved grana padano cheese. There's only a couple of ingredients: a nice ribeye, salt and pepper, olive oil. You need the fresh arugula, sliced red onion, and the shaved grana padano cheese. This dish is about simplicity. Now, just FYI, Grana Padano is one of the most popular cheeses in Italy. It has a distinctively grainy texture and comes from the Piana Padana region. It's the Po Valley, kind of northern Italy. It is a semi-fat hard cheese which is cooked and ripened slowly. Minimum time to ripen is usually about 9 months for Grana Padano and up to 20 plus months for Grana Padano Riserva, which is more grainy, crumbly, and fully flavored. Now, for this, we want to season the ribeye with salt and pepper, massage it with a touch of olive oil, allow it to rest at room temperature for 15 or 20 minutes. Heat up the grill, get it nice and hot. Place the ribeye on the grill and sear it for 4 minutes, then flip it over and cook for another 3 to 4 minutes, again, depending on your thickness. Next, allow it to rest for 3 minutes and then carefully slice it at a diagonal, making it look pretty. When serving, place it on warmed plates on a bed of fresh arugula and chopped red onion that's been seasoned with salt and pepper, dried oregano, and a squirt of olive oil and some fresh lemon juice. To finish it, place the steak and then dress it with razor-thin slices of the Grana Padano. Serve it immediately with a house Chianti. Buon appetito.